Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, this video is being filmed on Tuesday night for Wednesday's trading. And a couple of exciting things. First off, yesterday we talked about a bull flag in our video last night for trading today, right? The bull flag and the beans. Well, hey, baby, we caught a 20-point winner on that trade. Thank you, technical analysis. Past history, right? Who cares what we did yesterday? How about what's going to happen tomorrow? What I think, and by the way, this video is being filmed on December 1st, or is today December 2nd? Wait a minute, I got a problem here. What's tomorrow's date?
Today is the 1st.
Okay, thank you. We're filming this video on December 1st for trading Wednesday, December 2nd, and what we have for you is a red omni in bonds, because there was what I call a failed head test of the head and shoulders that's in bonds. There's a shoulder, head, shoulder. Market comes up and fails to get above the head. Usually you get a breakdown afterwards, and we have that, and we are going to show that to you. Traders, by the way, this head test that I talk about, once you see it on charts, that is a total Oscar omniism. I've never seen this anywhere, never read it in any books. Nobody does this. This is something I've invented. And I'm starting to see it in a lot of other places, so they're starting to listen to me out there. But this failed head test of the head and shoulders, I think you're going to like what you'll see there. And yes, that's one of mine. I have many, but that is absolutely an exclusive. What else do we have going on? We have the S&P and the Euro, and this needs a round of applause, with a green omni, baby. And we want that S&P to go higher. So we're expecting indices to come into a buy area and then rally. We'll see. You know, one of the things that we like to do in this environment that we're in right now, because we keep failing in the S&P around this 1113 area, that's the December S&P, what we want to do is just kind of stand aside, let it come into a good area, or an omni sweet spot as we call it, and then get in. So that's how we're going to approach it. We'll start with a neutral approach, and then we'll get in an area that looks appetizing. Of course, we have a trade already planned for that. So we are going to be selling bonds. We are going to be buying Euro and buying S&P if they set up. We do have trades at our site for you. Come on down to www.livewithoscar.com. Jump into the free chat rooms and allow us to show you how this head test works and where we're going to be getting in and getting out of these markets, because we can help you see this thing clearly. All right, traders, so I would like to show you a couple of charts. I'm going to show you the bond chart with the head and shoulders and the failed head test and some indicators, because I think once you've seen them, you'll be convinced that bonds technically should have a down day on Wednesday. With no further ado, let's go to the charts. Okay, traders, you are looking at the 30-year T-bonds. This is the March contract, the March 2010, and this is a daily bar chart, so each one of these green lines represents one day's trading. What you have here is an upright head and shoulders. Left shoulder, head, right shoulder. Now, I've shown this to you on many occasions in many videos that my brand of using head and shoulders, one of the things I like to do with them is to wait for a head test. So shoulder, head, shoulder, the shoulder builds up. When it gets out above the right shoulder, I like to draw a little grid here and see if it fails in this area, which is the head, right? The top of the head. If it fails right there, then I expect a breakdown. So what has happened the last few days, we rallied up. We hit right here at the top of this grid I left there and started to back off a little. Now the indicators are bearish. It looks like there has been a failed test of the head, or a failed head test, and I think now we go down in bonds. So we are going to look to sell the bonds for this reason. Traders, I don't know if you recall, but I probably did about 10 videos in a row where I showed this to you in a sugar chart over the last couple of months, and we got exactly this action. It went up, hit the head area, and broke down severely. That's what I think bonds will do, at least enough for a day trade, and we are day traders, don't forget. So that's what this trade will be for. Again, shoulder, head, shoulder. Expect a test of the head. If it fails to get above the head, then a breakdown comes. If it gets above the head, well, then you're into what I like to say a continuation pattern higher. But that's not what this one's calling for. This one technically is calling for the downside. Now let me show you some supporting indicators to back this up. Okay, traders, once again on the 30-year bond daily chart, this is the CCI or Commodity Channel Index. Clearly, we have gotten into the area where we seem to get a bit too overbought and it starts to break down. Then your averages cross one another. You can see the blue line crosses with the red line, and down we should go. When that happens, usually you get a break. It happened here. I'm expecting a break. So we have a bearish formation, as you can see with that head and shoulders and the failed head test. And now our technical indicators are starting to look bearish as well. Let's look at a couple of more indicators here. Okay, traders, sticking with the 30-year bond daily chart, this is the RSI, or Relative Strength Index, and clearly, as you can see here, we've gotten a little bit too overextended on the upside. Thank you, Dubai. Dubai Day gave us this big run up, and that set up a good short for us, and that's what we're looking for now. As you can see, we've gotten too far, and now we've made this hook right here, and this is also pointing lower. So you have technical indicators clearly agreeing with that head and shoulders failed head test. Let's look at one more indicator, traders. Okay, traders, now we are looking at the slow stochastic oscillator on the 30-year daily bond chart. Once again, same thing going on. As you can see, we've gotten a little too far, a little too fast. The market has gotten ahead of itself. It's gotten into this area where we usually run into an overbought situation, and that's what looks like is going on here. Percent K and percent D have crossed, and it is pointing lower. So technical indicators are certainly confirming that the bonds need a couple of days setback here, and the formation is bearish. And again, we're day traders. That's enough to go for a day trade. Pull your own charts, traders. Pull your indicators. Way more indicators than the three I've shown you are bearish. So look at all your indicators and make sure that you do agree with this analysis if you are going to take our trade recommendation. So, traders, you see those charts? I mean, come on, those indicators pointing down. And this, again, this Oscarism that we have, this Omni Trading Academy way of handling a formation. Shoulder, head, shoulder, as I've shown you, traders, this is exactly what the daily bond chart looks like, so go pull your own. You got the head and shoulders, and it ran up and failed to get through the middle to the top of the head. Right here is where it failed. The down arrow comes next, and that's what we're expecting, so make sure that you view it that way. And traders, of course, not every one of these are going to work, which is the reason why today we didn't trade bonds. We stood aside and we watched it. We saw the bonds fail up there, which means now for Wednesday we can get in and play them. So take a look at the head and shoulders in the bonds and look at your indicators. I believe you will understand why we want to go short. Now, with the Euro and the S&P, that S&P looks like it's ready to go through that flat top and just continue on going ahead. So that's what I'm basically going to be expecting for tomorrow and through the rest of the week in the S&P and the Euro. The traders, these videos, we try to do them nightly unless specified in the video. They are for the day at hand. In other words, the information in this video is for trading on December 2nd, so you can't look at it 5 days later and use the information 5 days later unless it's a weekend webinar. On our weekend webinars, then we like to step back and take a bird's eye view, a longer view, a larger approach of where the market is going overall. So that's what the weekend webinars are for. So remember that when you watch these nightly videos, you got to watch them timely because they are for trading the very next day. And I can say this, how many people out there get on video night after night and tell you what's happening tomorrow? Could you imagine? Try that at home. All right, traders. Hey, a couple of things we got going on here. One thing is our trading contest is open this week, and so far the traders are doing well, so up yours in that trading contest. Traders, I know I don't mention this in many of my videos, but I am a broker, and I can help you get your trades into your account. I can watch your account, and I can keep my eye on you, so I can be your personal assistant and your personal broker. If you'd like to open up a trading account with me personally, you come on down to my site. It's www.livewithoscar.com. Click the link for opening a VIP account, and I am there for you. So if you want to work with me personally like this, you come on down and open up an account with us. All right, enough of that. Anything else we got to talk about in this video, Mike, or can I run?
You can start running.
I can start running. Should I just run now or should I finish the video? All right, let me finish the video first. All right, traders. So that's about it. Remember, S&P and Euro, we expect an update, which means we expect a down day in dollars. And we expect a down day in bonds as well, which if the dollars go down, probably grains will go up. So, there's a lot going on out there. We have our fingers on the pulse of all of it. So make sure you come join us at the site. All right, traders, I'm going to skip town here. I want to go back to my chat rooms and do more studying. Give me a call anytime there at 702-629-4755. And as always, keep your emotions out of trading and always place your stop because a stop is your best friend. One of the best things you can do to help keep yourselves calm and keep your emotions out of trading is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.